Hello friends, now we have just recollected what is the need and necessity of auditing or relevance of auditing. After understanding this, now let us proceed further. Okay, so what is the difference between bookkeeping and accounting? What is the difference between bookkeeping, accountancy as well as auditing? So that let us focus our sight on the same one part. So now let us see what is bookkeeping. So bookkeeping is nothing but maintaining the books of accounts. This is done by the enterprise owner or a small PT shop owner or a small micro enterprise owner for his own satisfaction to make sure that normally how much business he does at the end of the day. Suppose if we go to the market today and see the shops there, normally just to ask the respective owner how much business you have done last day, how much business you have done last week, maybe Tuesday, Wednesday, Thursday, like that you ask. Definitely that owner will be able to tell you that he has done few thousands or he has done some thousands there, that is there. So that figure is exact. Why? Because at the end of the day, normally the enterprise owner maintains that book for his own satisfaction. Okay, so at the end of the day, he will be able to know how much sales he has done, how much business he has done. That's why he is able to tell you that. So that is there. So this art is normally called as bookkeeping. They maintain the books of accounts for themselves in a prescribed format by themselves, and normally again what they do is normally they record the transaction and keep it there for their own satisfaction purpose. Okay, so the benefit of this to them is normally one thing is they will come to know how much business they are doing, in which day the business is more, in which day the business is less, okay, and which items are fast moving and which items are slow moving, where for which product demand is more and for which product demand is less. This can be identified by the respective owners. That's why they go for bookkeeping there. One part is there. Now, what is the difference between bookkeeping and auditing now again? See, one side normally when you look at normally see the bookkeeping. Bookkeeping is conducted by the person who is actually the owner of the enterprise. Owner of the enterprise is concerned about this. Suppose if he is having a workers or normally he is having some helpers, these people are not concerned with the bookkeeping. Why these people are not concerned? Because they are interested only to know how much is the wage per day, how much they are paid at the end of the day. That's their bothering. Okay, so they are not concerned about normally what owner does, how much business he does, how much profit he earns, whether he is going to survive in the future days or not. That is not their concern. The concern of this is with the owner of the enterprise. That's why bookkeeping is normally done by the owner to know at the end of the day what is his business. So it is prepared naturally by the enterprise owner. First thing, and by on the other side, when you look at auditing, normally you see the auditing is done by a professional auditor. A professional auditor should be CA in qualification and must have membership of ICAI. This is one side. So it is done by a professional auditor. He takes normally the books of accounts, he cross checks that, verifies, and normally gives his comments on the same. That is there. So it is prepared by a professional auditor. Firstly, second thing is bookkeeping. Bookkeeping has got a limited scope. And define the scope of bookkeeping. Okay, it is having a limited scope. Why? Because it is done only for one enterprise, and secondly the size of the enterprise is small, and thirdly it is prepared for the satisfaction of the owner of the enterprise itself and not with any other intentions. That is one side. Whereas when you look at normally see the auditing has got higher scope. Why? Because it helps you to know the position of the business, it helps you to locate the errors, it also helps you to again identify where and by what chance the frauds are possible and how to avoid those frauds. That is there. And the purview of this is normally again is not restricted to small organization only. It can also be extended to the larger organizations, companies, larger corporations, corporates, etc. So that is there. Third thing is normally again suitability. Bookkeeping is suitable only for the small organization if the turnover is less than 5 lakhs per annum and all. So in such case they go for bookkeeping, and for which there is no prescribed format, for which there is no regulations, and this need not be submitted to the government, this need not be submitted to the income tax department, this is not cross checked and verified by any government officials. This is one side. Whereas when you look at auditing now again, we find that this is verified by the income tax official if necessary, government if necessary, if they find that if there is a faulty gross profit declaration, if they find that normally the liabilities are understated, or if they find that something is going wrong in the organization. In such case normally they can cross verify this. They can also appoint a special auditor in such cases. Okay, this is possible. So in such case this is suitable for small organization, medium size organization, large organization, and corporates also. This is one side. Bookkeeping, now looking at time consumption. Bookkeeping consumes less time. Why bookkeeping consumes less time? Because maybe the number of transactions in a day are very less, or sometimes there are days where the business takes place only in few hours a day. That is there. So depending on normally the business that is recorded, maybe the recordings may be small in some of the days and maybe it is large in some of the days where business is high, that is there. So, but it consumes less time. So, within quite a few minutes, an enterprise owner can enter that in his books and make sure that he has come out with the day's transaction. End of the day transaction is recorded. That is there. So, it consumes less time. Whereas on the other side, normally when you look at the auditing, normally auditing consumes more time. Why? Because the transaction has to be cross-checked, verified, date-wise, item-wise, party-wise, and normally again they have to again cross-check that normally the respective status of the transaction also. Status means whether it is received or receivable, paid or payable, like that. So, all these has to be cross-verified. At the end, normally the result comes. So, it will take its own time. Generally, it is a long time. Okay, that is one side. And next one is normally bookkeeping has got no specific format. Okay, it's like where to enter the debit transaction, where to enter the credit transaction, where to enter the date, particulars. Likewise, there is no specific format for a bookkeeping. Whereas normally when you look at normally the auditing has got a particular format, and based on the format, auditing is been undertaken there. So, they have cross-check and verify the transaction date-wise, item-wise, and then normally amount-wise, party-wise they check. So, in such case, normally these things are to be noted when you look at normally the differences between bookkeeping as well as auditing. Next, we will see normally one more area. What is the difference between accountancy and auditing? Okay, so we should know that normally the accounting is the basic for every businesses, is it not? It's a financial area which is to be very important and normally which has to be taken very seriously by every organization. So, now coming to the differences between auditing and normally the accountancy. See, audit begins when accountancy ends. This is very important. Please note down this. Okay, audit begins when accountancy ends. So, which means that the work of the auditor starts only after closing the books of accounts. Generally, the books of accounts in India are closed on 31st March every year, opened on 1st April next year. So, the financial year is from April 1st this year to 31st March next year, first thing. And second thing is auditor's work will start only after books of accounts are closed, which means that accountancy ends, audit begins, first thing. And second thing is normally the purpose of audit is normally again to identify the transaction, to verify the transaction, and to see that normally whether it is genuine or not genuine, whether there are errors or frauds in the transaction. That is the purpose of normally the audit. Whereas the purpose of accountancy is normally again to know the financial position of an enterprise. Financial position means what is the size of assets, what is the size of liability. That is the basic purpose of accountancy. And next one is format. Account has got a prescribed format. Okay, journalizing the transaction happens first, and then normally again after journalizing, normally again the same is recorded in the ledger, and then normally again trial balance is prepared, and based on the trial balance the final accounts are prepared. Today when you come across normally the company, the books of accounts of the company are prepared as per the provisions laid down in the New Companies Act 2013. In the New Companies Act 2013, normally again there are some specifications like first thing is normally your annual account should be prepared in vertical form only, and when the accounts are prepared in the vertical form, normally again there must be schedules affixed. Schedule means normally it describes normally the breakup of each item, the list of each item. Suppose if you want to see normally the share capital, it's in schedule number 1. Reserves and surplus, it is in schedule number 2, like that. So, that is more important. So, when we refer back to the schedule of the company, we will come to know what is the breakup of each item. That is one side. So, new companies, as per normally the New Companies Act, the account should be prepared in the vertical form. Whereas auditing is normally starting only after the preparation of an account. There is no prescribed format as in accounts. That is one side. Regulating bodies. So, accounts as well as audit both are regulated by the same body, that is ICAI, Institute of Chartered Accountants of India, and Indian Accounting Standards Board, IASB. Based on this, normally the regulation is done. Time consumption. Audit takes normally the more time normally than preparation of accounts. Why? Because starting the transactions at the beginning of the year till the end of the year, everything is cross-checked, everything is normally to be verified. That is one side. Scope of auditing is more, and even accounts is also more. Both has got equal scope here. When you look at normally scope and normally focus, the focus is normally again to know the financial position. The accounts focus is to know the financial position. Auditing focus on normally to know the genuineness of the transaction. This how it is. So these things are normally to be again noted here. So first thing, bookkeeping normally is normally an art of recording the transaction by the owner himself, and then normally when you look at auditing, auditing is done for the purpose of verification of the transactions. One point is there. So this is how the differences goes: bookkeeping versus auditing, accounting versus auditing. Okay, thank you very much.